All right, we are live. Welcome back to the Mr. Rent to Own Homes show. My name is Dominic Danino, aka Mr. Rent to Own Homes, and I am joined once again by James Brown, real estate investor, real estate agent in Colorado. And today we're going to be talking about the stock market. What's happening there? What are the impacts from the stock market crash? It's crashing as I speak right now. Dow is down 1,700 points. A little bit over 4%. What are the impacts to housing and interest rates if we get a crash and a continuous correction and maybe even some speak of recession? So welcome back, James. How you doing, buddy?
I'm doing well, man.
Cool. So let's get into it. I know we're going to try to keep this one short and sweet, right? But we want to talk about this topic here because I think it does have impacts to real estate and housing in general. So typically when you get a stock market that's selling off, investors on Wall Street have to take that money and put it somewhere else. And typically what they do is they put it into bonds. And I think if for those of you that have listened to our show before, I've talked about how rates are determined. That typically comes from the bond market. Typically the 10-year treasury. And so it's considered a safe haven. So when they call it risk on, risk off. Risk on means, hey, we're going to take risk and buy stocks because stocks are going to go up and they're more risky. But if it's going up, then let's buy some. And they say risk off is we're going to sell stocks and we're going to go into bonds or treasuries because those are backed by the government and it's going to guarantee an interest rate. It's going to guarantee a return. So it becomes not return on your money, but return of your money. Right? So I can get into the weeds with stock market trading and all that from a past life, but I want to focus on the impacts that it has to housing. If people move money out of stocks, then they put it into bonds, potentially lower interest rates, and then that has a trickle effect. Now there's also other trickle effects, right? So, well, why is it crashing? For whatever public policy, economics, whatever that may be. Right. And then that has an impact on potential, layoffs, job market, recession. So that tends to drive interest rates lower. Right. And eventually maybe the Fed will have to take some action and say, hey, the economy's slowing down, or we've had negative GDP Q1 2025, or we get a second read in Q2 2025. So typically a recession is actually the definition of it is negative GDP for 2 quarters straight, right? So Goldman is already calling that the first quarter is going to be negative GDP and potentially second quarter as well. And when I say Goldman Sachs.
Yep.
Right. So they're expecting that. And then, you have impacts on potential layoffs with government employees. So there's some areas of the country that are going to be impacted more, right? I mean, one of them being DC. Right. Clearly, there's a lot of government employees that are impacted there. If they're getting laid off, then that's going to have a trickle effect on, the ability to either buy or maintain their living standards, or potentially having to sell. Right. Because they can't afford it anymore, or they don't have a job. So now I got to go look for another job. And now my new job is going to be, I don't know, Atlanta, Chicago, or wherever that may be. Right. So now they got to sell and move on. Right. So there are impacts to that. Right. So I want to get into that and kind of talk about all these impacts of the stock market crashing here. So any thoughts on this? What are you seeing in your market in Colorado there? Any talk of this? I know maybe Colorado has some federal employees there, but what are you hearing?
Yeah, we're more tech-based, less government, but I mean, we still have lots of government employees as well. And military bases, more Colorado Springs, but
yeah, there's a trickle effect there too. And then also, let's say you have a lot of tech. Well, tech is getting hit hard. Stock market tech is getting hit pretty hard right now, right? So let's say I am an employee in a tech company and I have my money or my pension, or I get paid bonuses and stock shares. Well, if the stock shares are taking a hit, well, I'm not going to feel that good, right? So am I going to pull back and spend less? Maybe I had the cash to buy a house, but maybe I don't have the cash anymore. Or,
Yeah.
hey, I'm going to sell off my stock and put it into cash, and I got to go do something with that money. Do I want to have money just sitting in a savings account collecting, I don't know, 1%? Maybe I got to reinvest that money doing something else, maybe into real estate, right? Maybe potentially a rental property or some other opportunity in real estate, or gold. People are going into gold. I'm not a big fan of gold, other than if you're going to wear it around your neck as an asset. But that's a whole different. It has different uses. I don't think it has the same value as it used to back, in the in the Roman era. Okay, so let's just be honest about it, right? People aren't walking around with bars of gold in their pocket.
No.
Right. It's easily exchanged. You got to go cash it in to get it exchanged. Right. If there's an Armageddon, okay, I got a bullion gold bar here. Can I buy a loaf of bread with it? Probably not. Right. So so that's and the majority gold is held in ETFs or warehouse somewhere else. It isn't like actively exchanged. So that's my own opinion on gold per se. Right. It's just another way to hold money. I mean, so I guess theoretically you could put it into any Bitcoin or crypto or anything else that holds another asset. But to us that we're in this space, right? Real estate for us is tangible, right? Real estate has a purpose, right? There's a need for real estate because people need a roof over their head, right?
Yep.
Yes, it's not as liquid, right? It's not as liquid as a stock that you can sell and buy, right? There's a timeline with that. So it isn't liquid, but if you're going to step into real estate, then you got to understand that. I wouldn't call it risk, but that potential of having the hold. Like you have to have a little bit of at least a 12-month timeline.
Yeah,
it doesn't make sense to buy a house and resell it unless you're a flipper, right? Unless you're a rehabber, you buying distressed assets, properties that are run down. We call them ugly houses, and pretty them up, and then put them on the market and resell them at retail after they've been HGTV'd, right?
Right. Yeah.
So, I mean, that's a way if you want to do real estate at speed, right? You could call that, day trading real estate, right? Flipping, day trading real estate, right? So that's a shorter timeline, right? But that requires a different skill set. And most people don't have that skill set. Most people don't have the time. If they got a W-2 job or work 40 hours a week or own business, they don't have time to do that and go flip houses per se, right? So leave that to the pros. I know HGTV makes it look easy, but it's a little bit more complicated than that, right? So, but on that note, any thoughts of say, hey, I have money, I am in tech in the Denver market in Colorado, right? And I have stocks in my tech company, but my employer, but hey, I want to liquidate some of that, put it into cash, but then if it's just sitting there at 1% and I have a big chunk of cash, I mean, what would you do with it?
Yeah, I mean, it depends on how much money they've got in their timeline, obviously, right? But yeah, 1% isn't very exciting. I mean, it's
no, it's not.
I mean, you're losing, right? When you look at it.
Yeah.
Inflation. You're
right.
Like,
compared to inflation. Exactly.
Yeah. The bucket's full of holes. So you got to do something.
Yeah.
And I mean, there's a reason why we are in real estate and stocks. Like we both have both, right? But not heavily weighted one way or the other. Well, more on real estate because we understand the long-term wealth building of that versus stock. We go in all the reasons, like we're in control. It's not just some random company that can go poof, So.
And in general, I don't like to say, hey, you should be 100 in one thing and not and 0 in the other per se, right? So, but can you be weighted at different times in the market cycle? Can you be weighted higher on one versus the other? Sure. If you don't have an ability to go ahead and understand real estate, but you're just putting money away in the stock market in your retirement account, fine. But you really don't have any control. So you're just kind of, we call dollar cost averaging. You're just putting a little bit of each month, right?
Yep.
But eventually when you build up enough and now you have these fluctuations in the stock market, now could you, I never tell anybody would sell everything. I'm saying, hey, maybe you should reallocate a portion of that. But before you do that, or you really should have a plan before you're going to execute that, right? But let's say reallocate some of that and say, hey, where should I be putting it? Where, right? So you go from 100% down to 80% or 70 or even 50 if you wanted to, right? I never say go to zero, but you should be allocating some of that into cash, parking it. You could theoretically just park it and say, hey, I'm going to wait it out, see what happens here. Maybe things settle, and maybe it could be 3 months, 6 months, a year, 2. Who knows, right? Typically, recessions last 9 months, right? So if you have that kind of timeline, then, hey, something to consider. Or you can say, you know what? I build up so much in the stock market. I have too much risk in just one asset class. So maybe I need to move a chunk of that and say, hey, I want to diversify it into something else, right? For us, it's real estate. Could it be gold? Could it be crypto? Crypto right now, it's acting just the same way as the stock market. So when it first came out, where it was diversified because it didn't act like the stock market, but everybody that plays in the stock market is in crypto now, so they act the same. When stock market is up, crypto's up. When the stock market is down, Bitcoin is down, right? So what is the difference? You're buying the same thing, or it's acting the same way. So what's the point, right? So I think looking at ways to diversify, and let's go down that path. Let's say, hey, I've made a decision to reallocate my money, and I have money parked in a savings account, but I need to do something with it because I don't want to get the 1% return as we're talking about, right? So really, let's go down that path. I would say, hey, first of all, do you own your primary residence? Do you own a home, right? So I would walk down this path and say, hey, kind of like a checklist. Like, okay, first, I have money. Second, can I buy a house to live in? Is that a better option than potentially renting? If you already own your home, okay, then you've already checked off box 1, right? So what is the next option? So you want to talk about, let's say you already own your home. So first, for everybody out there, try to buy your own home if you can, and if it makes sense from a payment standpoint in comparison to if you're renting, right? And there are options. Let's say, how about the ones that say, hey, I have the money, I want to buy a home, but I can't get qualified, right? So we are a plan B for that, right? As it relates to our rent-to-own home program. In case you don't qualify, you've been turned down by the banks. So we're an option for that. So if you've checked that box off, then what other options would there be if I came to you and said, James, I already own my home, right? But I got cash. I want to do something with it. And I think I want to allocate a portion of my overall portfolio and assets and money into real estate. What could they do?
Well, and before we even jump into that, I mean, I'd say we were talking about diversifying. You can diversify in real estate too, because there's so many different asset classes and strategies. Like if you were in Airbnb, you might be in trouble right now. So it might be good to kind of get into other things. But I would say, here, I got to start a Zoom here. Let me start it and see if this guy jumps on. I might have to jump off, but let's see if we can run this at the same time.
All right, so I'll take it from there, right, while you're doing that, right? So basically, yes, so there are various ways for you to invest in real estate, right? So if you already own your own home, great. Now the next step is either potentially buying a rental property. So there are multiple strategies within the real estate space. You could get into flipping, right? So buying distressed properties, fix them up, HGTV in them, and put them on the market, right? You could buy a traditional rental and place a traditional tenant for 12 months. You talked about Airbnb, right? So Airbnb was super hot, but it's cooled off. Doesn't mean it's a bad strategy. The reason people got into it, they thought it worked everywhere. And that was an outlier time in 2020, 2021. It still works, but you have to understand where and why it works, right? So you can't just buy a property next to the Circle K, next to the pawn shop, next to the smoke shop, and say, oh, I'm going to just Airbnb it out in the middle of nowhere, right? That's not working anymore. It has to be location specific and understand what that market may be, right? And then so after Airbnb, you could be a private lender with your money, right? People don't even realize it. You could be a private lender. If you have an allocation of money, there are people that will borrow money from you, secured by the real estate, and pay you interest, pay you monthly installments to borrow that money, secured by the real estate, right? So you're basically becoming the bank in that method. That's another way to invest.
I got to jump off of here.
A lot of people like that, right?
I got to jump off here. I would just say to start, if you got an extra bedroom, rent that out. So
that too, right? So I'll close it out.
I gotta go.
I can't hear you.
All right, we'll talk.
All right, cool. See you.
All right. So my point being is, you kind of have to go through this process beforehand before you're ready to bail out, right? And if you haven't talked to somebody that understands this, you should reach out. I'll be happy to hop on a call with you and kind of walk you through that path and give you some options. Not necessarily what I do, but hey, let's talk about what your situation is, right? So that's it for today. Reach out to me. I am at rent2ownhomes.com. I am at Mr. Rent2own on TikTok, Instagram, and YouTube. And until next time, we'll see you. Bye-bye.